Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, May 3rd, 5:22 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in a correction. You can see over here in the upper right at the trend gauge, we continue to be red arrows across the board, meaning bearish/downtrend for market leaders, and also across all three time frames that we track on the indexes: the short-term 21-day EMA, the medium-term 50-day EMA, the long-term 200-day moving average. No change to report there. So what happened today? Second day off the bottom, green day, tight range, waiting on the Fed tomorrow. They're very much expected to raise interest rates by 0.5%. The question is, what will their outlook be after that? What comments will they make on inflation? And how will the market react to those comments? So that's typically lots of volatility after 2 p.m. Eastern Time tomorrow, especially during the press conference, which starts at 2:30, and then Thursday and Friday we'll be on the lookout for what the follow-up reaction is. So as I said, green on the day. G6 growth up 0.7%, S&P up 0.5%, NASDAQ 100 up 0.1, Dow up 0.2, mid caps up 1%, Russell 2000 up 0.85. Global diversified 60/40 stock and bond up 0.47. We are still in 88% cash in-house. We have a short-term inflation protected bond, 10% allocation, and a very small allocation to a commodity ETF. We're down slightly on the day, minus 0.03%. We're content right now with protecting our 6% to the good year to date versus the S&P 500, waiting for better days in the market to put some money to work. So let's get right into it, the tail of the tape and the indexes. But first, let's take a look here at the team at Revere. Trend following is what we do right now. The trend is down. That's why we are, for the most part, out of the market. The market turns positive. We'll knock the cover off the ball like we did in after 2020, after COVID, a fantastic second half of the year. Market digests or goes sideways. We take our foot off the gas and wait for the next move. Market down, we're out of the way. If you're interested in this approach, you can email any of us, Dan, Tim, Hunter, Mural, Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. So tail of the tape and the indexes. So here's the S&P 500. You can see the undercut of the 224 low yesterday. Not quite as big a washout or a move to the downside as happened on 124 and 224, but maybe the fact that those happen means they can't happen again. Is this big enough for a washout? We don't know, but the coming days and the reaction of the Fed will go a long way to answering that question. But for now, we monitor the low of Monday. That was 40.6251. 4,200 here, serving as a very tight, tough wall to get through of resistance to the upside. Knocked on that wall several times today, could not get through it. Let's take a look at a 5-minute chart here. You can see really a tight range between 4150 and 4200 today. Tried several times to get through it. Couldn't get through it. You can see the tight range relative to yesterday and some of the prior days, as pretty much the market's waiting to see what the Fed's going to say. Let's look at the NASDAQ 100. Also under all key moving averages. This is the 200, the black line. The red line is the 50. The green line is the 21. The 8 is the purple line. And these are configured exactly opposite of the way we want them to be if we were in a bull market. So really, first step we need to take is to start chipping away, get back above some of these moving averages, and then try to work our way higher. Let's take a look at the Dow Jones Industrial Average. This is down the least year to date of the major indexes, down 9%. Same situation. Notice it did not undercut 224 above this 33 level, but also under all of the four moving averages that we track. MDY is the mid cap ETF, under all of them. Undercut the 124 and 224 lows, bounced off this 450 level. Ran into the declining ADMA today and could not get above it. Let's check IWM, small caps. Same thing, ran into the declining ADMA today, couldn't get above it, did undercut also. And so really we're in the same situation for all five of the major indexes, and the situation ain't good. But let's see what the Fed has to say and what the market reaction to the Fed has to say. So let's go to the tail of the tape. We continue to be facing the strong dollar, inflation, Fed taper, and balance sheet reduction, rising interest rates, and Russia-Ukraine as headwinds. Put call 1.05. We peaked over the last week at 1.3. VIX down 9.6% today at 29.25. Fear and greed is at a 32. So here's what we're looking for: initiate a rally, reclaim, at least need to get back above 4,200. We've failed with the rally and could not get back above that today and yesterday. We're operating under the bear case right now. We had our rally failure and break of all the reclaimed moving averages that we had with the bull case, and that was certainly confirmed on 422 with the breakdown below the most recent support area. So news, as I mentioned, Fed announcement Wednesday, 2 p.m. Eastern. Also Friday, jobs report at 8:30 Eastern. That's announced. So what we were watching coming into today, main thing was how would we handle overhead resistance at 4160 to 4200, that level, and yesterday's low 4062. Didn't even test yesterday's lows, as we're looking at a long tail shakeout currently, but we spent most of the day inside this 4160 to 4200 area, repeatedly rejected whenever we got to 4200. Let's take a look at that one more time on the 5-minute. You can see here multiple attempts throughout the day, could not get through it. Looking for some relative strength out of the SOX, and here's why. After hours today, AMD with a positive reaction to earnings, up 7%. Now AMD is a former leader. The chart is very clearly broken, but ON reported earnings a couple days ago, knocked it out of the park, and has been showing some relative strength. Look at the relative strength here. We had a great report from Qualcomm also showing relative strength, working its way back above its moving averages. So let's look at the SOX here. Notice it did not make a lower low Monday the way the NASDAQ 100 did. So for now, and really since the middle of last week when these semiconductor earnings reports started to come out, we've seen some relative strength over the last 4 sessions. Note again, the QQQ undercut Friday and Monday, and we did not on the SOX. So sometimes you just look for pockets of strength as potential leadership, and the SOX is one area that we're looking at. The fundamentals are still there. Great earnings reports. The charts are broken. If the charts get repaired, this may be a place for money to flow into, but keep in mind, growth stocks and anything with an exceedingly high PE has been a source of funds as the market has gone defensive all throughout 2022, but we are keeping an eye on that SOX relative strength. Third day down, panic washout. Haven't approached that yet. Got kind of something like it. Got about 7% or in the 6s below the 50-day moving average yesterday, but not a big panic washout. It was more like controlled selling. Watching a couple of key stocks that broke the 21-day moving average. Some of them have held their 50. Some of them actually reclaimed the 21. So we're using this list and about probably 45 more stocks to see where the pockets of strength are. and to see if the market turns higher, if they continue to outperform. So I talked about the action today. Small up on the open, 0.1%, tight range consolidation all day long. We're 3.6% above this washout SPX minus 8% level versus the 50-day moving average. Sectors today, bonds were strong, gold and gold stocks strong, oils very strong. Let's take a look at a couple of oils. Devon reported earnings and just had a great day, up 10% right off these moving averages. Seemed like money really wanted to flow into oil today as the oil ETFs have pulled back to their moving averages. And this is despite the fact they had big moves, despite the fact that USO was down on the day over 2%. Fertilizers, really a good day today. The hindsight trade of the day was Mosaic. It gapped down and then slingshotted higher, reclaiming the 50 and the 21. Like to see a little bit of digestion on this and continued strength into some of the other fertilizer stocks. Here's CF, had a great day today. They've got earnings tomorrow. And also NTR. They reported earnings a couple days ago and also had a very nice day today. So money flowing back into oils and fertilizers, which were the leaders for a while, now consolidated down near their 50-day moving average. Let's see if they're ready to take another leap higher. Weak on the day, XLY, XLP, as I mentioned, PDBC, which were long, was down 1.7% on the day. Cybersecurity stocks and really all software stocks were weak on the day. No trades today. Portfolio very lightly allocated. As I mentioned, our adjusted beta 0.02%. So bottom line, digestion day under all key moving averages as a Fed rate hike. Fully expected. Anything else would be a surprise. Fed rate hike looms tomorrow. Need to recapture the moving averages and see what the reaction is to that. Let's take a look at a couple of other charts. OLN, something that was on the survivor list, made a higher high today after its gap up on earnings, trying to break out of a cup and handle here. Let's see what else. I showed the fertilizer stock, Silica, and oil. Really, they're a sand company for fracking. Reported earnings, had a decent day, back above the 21, something I've got an eye on. I showed Devon Fang, another oil stock, also reported and had a nice day. And let's see, I know there was one more I wanted to show here. Oh, one of the biggest leaders is Valero, VLO, but that's extended. That's a oil and gas refiner. That's going to wrap it. As always, love to hear feedback from you. Email me, don@revereasset.com. If you're paying attention to what we're doing and you've benefited from it, tell us what you like in these nightly videos, or tell us something that you'd like to see that we don't currently track. We're always open to improvement, and you can reach me, don@revereasset.com, or you can phone 855 Real Wealth. We've had quite a few people calling lately, inquiring about our process and our money management. As the word gets around these times when the market is selling off hard and we're protecting people's hard-earned capital, that maybe there's a better way than just sitting and buy and hold and letting the market give it to you. And it's not always good what they give to you. So again, email don@revereasset.com, phone 855 Real Wealth. So wrapping up Tuesday, May 3rd, this is Don Vandenbord with Just the Facts. Thanks for listening and have a great day.